Hey, everybody, and welcome to the Open Forum podcast. Today we have with us Arno Wellens. Arno is a journalist, a writer, and a speaker. He has a degree in business economics from the University of Amsterdam, and he's also, prior to diving into journalism, worked in the banking industry, in the banking sector with KPMG, amongst others. But Arno, that's a very short 20-second introduction to who you are. Can you maybe take 2 minutes and, let us know who you are, and then we're just going to dive on in.
Well, that was basically correct. I was born in the Netherlands, a small village. Then I moved to Amsterdam for my education. I did work for some banks, etc. I was on the audit team that approved the final annual report from Fortis Bank. Fortis Bank was a major Belgian-Dutch banking consortium, and they collapsed in the previous credit crisis. And that was a very interesting moment, very insightful, because you can follow all the procedures. You can think you do everything right according to regulations with respect to auditing, risk management, how you report it, and still, before you know it, a bank can suddenly collapse. These things happen, so your economy is probably much more fragile than you think it is. Then I met a Dutch journalist. I think most people know him. His name is Jort Kelder, and he said, "You know what? If you become a journalist, then you'll probably be one of the few people who can then actually read or understand what's happening inside banks, because most journalists don't." I think that's a major problem with journalism in general. That if you study journalism, if you say, "Well, I want to be a journalist and I study journalism," you don't need to. There's no mathematics or anything that.
No, you don't have to have insight into the particular area of journalism
exactly
you're diving into.
You're graduated, and then you have to start from scratch. So if you're a journalist and you've been that for 5 or 10 years, you say, "Well, you consider yourself to be a experienced journalist," and they put you in front of a banker who has done something nasty. Let's put it that way. It's very difficult for you
to really dig in deep on the finer aspects, the finer details that got you to where you are. Look, I think that's probably
that's what I do.
A nice sort of place to begin the financial crisis, but we're not going to be able to talk up to the digital currency situation, the crypto situation, without first having a little bit of that history. So maybe you can talk to us about how did we get to this situation with the financial crisis, what brought us to that point, and how that has now led up to this issue that we're now facing with potential implementation of digital currencies. And then we'll later on maybe touch on the potential sinister aspects of that.
Such a question. Well, luckily, I think I'm capable of answering that, because
just a little bit, yeah.
I've been doing my homework. Well, basically, what's happening is that in 2008 you had a credit crisis, and right after that the euro crisis, and the problems that you had at these moments in the American housing market, but also in the Dutch housing market, the flaws in the currency union, they all became apparent. And what our policymakers did, and they made a terrible mistake by actually asking central banks to fix the situation. So politicians didn't take their responsibility. They asked central banks to do it. So that's where the money printing came from. So, for example, if you look at the Eurozone, if you want to have a single currency between nations that differ considerably, you need to have a very strong central power that is capable of intervening. Because under normal circumstances, if you're, say, Greece or Italy, if you're a country in the periphery, as they call it, but make no mistake, France is in the periphery as well. I think even France is too weak to be in the Eurozone, which is effectively the Deutschmark. What's happening is that if you're in a recession, most Europeans, they hate to admit it, but actually Germany is the stronger economy. But anyway, if you're in a recession, most countries can actually make their own policy. So they can either lower interest rates to attract investors, they can sort of debase their currency, which you shouldn't do too much, but that could make your exports cheaper, and invite tourism, or you can accept a budget deficit for a shorter period of time and make sure that you have that you keep people working. For example, in the Netherlands, you have the Afsluitdijk. So it's the connection between the provinces of North Holland and Frisia, for example. It's a 30-meter dike just through the water. It's a connection. And a lot of people ask, why would you build that? Well, they built it in the 30s because there was in the 20s, because there was a lot of unemployment. And the government said, well, rather than staying home, let's go build some infrastructure. The Amsterdamse Bos, the park, for example, was also built at that time. Problem is, if you're in a currency union, let's say if you're in the Eurozone and you're Greece, you can't do all these things. First of all, you can't lower your interest rates because you don't have a central bank anymore. The central bank left for Frankfurt. You don't have your own currency anymore because it doesn't exist. There's no Greek drachme, for example, or the Italian lira. It's all gone, or the Spanish peseta. So these countries are stuck. Then what you could do is accept budget deficits. So you can, the Keynesian argument, counter-cyclical investments from the government, you can't do that either because it's forbidden by law. So you're stuck. Well, if you're unemployed and you're living in one of these countries, well, what can you do? Well, the idea, the philosophy, the ideology behind European integration is that, well, in that case, you should be able to move. That's why we removed the internal borders without checking for what's happening at the external borders, which become common for everybody, but that's another discussion. So the idea was, well, if you're unemployed in Greece, you can simply go to Germany. Because now we're all one country. A bunch of politicians say, well, we are all one country right now, so you should behave like we are one country. However, we have, well, a super state, but it doesn't work like that. The state follows the desires of the people, and not you can't create a state. it's not, that doesn't work like that. So the end result is it's very predictable. People don't move. There's no labor mobility in the European Union. Well, you might say, hey, wait a minute, I'm the exception. But luckily, Dutch people, they know how to speak English. But in general, if you compare labor mobility in the European Union and the United States of America, it's a factor of about 10, something like that. Because
someone might say, just on that labor movement aspect, you do have some shifts in labor. Okay, maybe not from Greece, but you have the shift from Eastern European countries towards the UK, towards the Netherlands, and they pick up the more manual labor jobs, that side of thing. And then from their side, then they're picking up people from Ukraine, going to Poland and that kind of thing. So there is some element of movement in the labor force, right?
To some extent, yes, but most jobs, they are usually in the extreme higher end or the lower end of your, and as the Dutch call it, the salary building.
Yeah.
So for most middle class jobs, it is very hard to move. I mean, if you're a chemistry teacher in Greece and you want to move to the Netherlands, it's quite hard. It is much harder to do that than if you go from North to South Dakota in the United States. So there is labor mobility, and these American states, they absorb each other's shocks. And in Europe, it doesn't really happen because all these economies and the cultures and the languages are so different. And as a result, what they should have done in 1992, when they decided on implementing the euro, they should have said, well, you know what? We want to be together. It is a huge project. It is very ambitious, but if your ambitions are high, your willingness to sacrifice should be high as well. But for example, the Dutch people, about 72%, they make calculations of that, estimates, inquiries, 72% of the Dutch people don't want to pay for other European nations. They simply don't want it. They don't feel the amount of solidarity. And then our politicians said, well, you know what? We will go on with the euro. We don't prepare ourselves for a crisis, and then we go and sit with our fingers crossed and hope that a crisis will never hit us. That's literally what they did. Well, then the crisis hits you, then you don't know what to do. At that point in time, the central banks, the European Central Bank said, well, if the politicians don't want to take their responsibility, I will do it. Mario Draghi said it. He said, I will do whatever it takes to save the euro. And he did. You can, if this man says something, you can rely on him. He will do that. So he unleashed a tremendous wall of money. to make up for the shortcomings, the institutional shortcomings of the Eurozone. But at a tremendous cost. And that is the inflation that you see right now. And to answer your question in the beginning, the problem is that the holes or the institutional shortcomings have never been addressed. So you have these institutional shortcomings, then you hit a wall, right? The crisis starts, but you don't really address the root cause of the crisis. So the root cause of the crisis persists into the next crisis, and then it hurts twice as much.
So what the root causes of the crisis that happened in 2008 and what we're seeing sort of rebounding now during the corona crisis? Now, let's go from there.
There's no central government. If you if you have one currency union, you need to have one Ministry of Finance, and it needs to be able to issue debt to make up for the shortcomings that I mentioned, and it needs to levy taxes to service those bonds, those government bonds. If you want to build a currency union, you need to become a complete political union, and there's actually no debate about it. You can be in favor of it for some reason or not, but that doesn't mean that you should be against the facts. I mean, it's very simple. If you want to run a marathon, you should train for 3 months. And you can say, well, I don't think it's worth it, so I'm not going to do it. Well, that's fine. But if you don't accept the responsibility, you can't have these giant ambitions. And one of these responsibilities, one of these prerequisites is a central taxpayer-funded Ministry of Finance, and the taxes in the Netherlands should go up by 5% points of GDP, which means a 10%, something like that, tax increase. And if you do that, and it's like a rainy day fund. I would literally want to call it like that. It's a rainy day fund. All nations put some money in a jar for the rainy day fund. When there actually is a rainy day, you have your jar and you can help the people that need it most. And that's the solidarity that you need to make it work. And in 2012, we had a euro crisis. And at a number of meetings, like in February 8th, 2013, a decision was made to let the European Commission levy their own taxes. But it was highly unpopular with the population. So what all the governments did, the government leaders, especially the Dutch Prime Minister Rutte, what he said, well, no, I've never signed it. We will not raise any taxes, etc., etc. But he did promise that he would do so in Brussels. So as a result, the bond yields went down. So the interest rates that the Southern European nations had to pay were decreasing because financial markets were assuming that if there would be a next crisis, which was obviously around the corner, then the Dutch would pay anyway. And he made there was some political gymnastics. So when you see him in the Netherlands, he will always say, no, I've never signed it. No, we shouldn't increase taxes because nobody likes taxes, right? Taxes should go down. But when he's in Brussels, he says, no, when the time is there, when the time comes, I will actually
step up and make the decision.
Step up and make the necessary payments to save the euro. And that's the schizophrenic situation that we've been in for years. But during those years, they have before Corona, there have never been any real transfers. They weren't really large. So as a result, the central banks had to do it. The European Central Bank had to print all this money and make up for these shortcomings.
So one of the things that we've not yet addressed is they've printed this money.
Yes.
We've not mentioned why they've printed this money. And I suppose one of the things that we'll address later on is where this money has come from, whether it's come out of thin air or if it's come from somewhere else out of our taxes or what. But we haven't addressed why they're printing this money and why there's this sudden deficit. So perhaps it's a good idea to explain where that deficit has come from, and then why them printing this money was initially thought it was a good idea. Actually, it's not really, and it's only dug a deeper hole, and why this whole debt system that we've now massively accrued has put us in this place.
Well, if I want to answer this question, the thing is, with this printing of money, which is quite an interesting concept, because you would say, well, if somebody can print money, you just give it to everybody. It doesn't work like that. If the central bank, the ECB as well, but any central bank, if they want to print money, what they basically do is they can create money on their own balance sheet. They can do that. Then they have excess liquidity. What they then do, they say, well, let's suppose, I just took this as an example. Let's suppose over here is ABN AMRO, Dutch bank. And over here we have the central bank, Christine Lagarde. If she wants to create money in the economy, what she does is Christine Lagarde creates money. Let's see if I have some money in my pockets. That would be...
actually, demonstration.
I do. Yeah, I'll show you the technicalities of money printing. So over there, there's the central bank, and over there, there's ABN AMRO. The central bank does its magic. Suddenly, there's money. The central bank can't actually give this money to where it's needed, to a hospital. A central bank doesn't have the legal powers to fund whoever they want, because if you would do that, you would have a financial dictatorship. It doesn't work like that. The central bank can do one thing and one thing only. What a central bank will do is that they will call a certain bank, like ABN AMRO. ABN AMRO is over here, and they say, hey, ABN AMRO, we want to make sure that this money will be available on your balance sheet, so you can actually make loans to business owners. And as a result of that these business owners will make more investments. These investments will need more employees. And as a result of that, unemployment will drop and economic output will increase. That's the whole idea. So ABN AMRO calls, the central bank calls ABN AMRO, and ABN AMRO says, well, actually, I have to sell you something, right? Because it's double entry accounting. That's how it works. I mean, if ABN AMRO, they have a balance sheet with assets, and now they actually have to trade something. So it's literally this. And now the central bank is holding these pens, and ABN AMRO has all this cash.
Yep.
In exchange for this. That's how it works. And then they call the bank next month and they do it again and again. And that's an indirect way of financing, because indeed, if business owners will use these investments to improve output, they will pay more taxes. And as a result, the government should have more revenues. And that's how you fight recession. That's the idea. That's basically the idea. What's also happening, and that is how you solve the deficit problem with these poorer governments in the short run, is that if you do this, if the central bank actually creates artificial demand, I have only one of these, but I will act like there's more because I will put it under the table. The central bank will call ABN AMRO every month and they say, hey, do you have any more of these? Oh, sure, ABN AMRO says, and they will sell it some more. Central bank comes back next month. Oh, please do that again. So you create all this artificial demand, and it is actually real money that is going in the opposite direction all the time. And because you do this all the time, the demand for these pens, which are actually government bonds, it increases. Because if you are an investor, if you're a saver, for example, and you've invested in Greek government bonds, you can do that. You can also not do it, but let's assume that you have, because a central bank is meddling with the financial markets. They actually artificially increase demand for government bonds, because there's a huge financial power, monetary power that calls you up every month and it says, I want to buy this, I want to buy this. Well, the price of these will go up. And that's a secondary market. That's what they call it. And if your government bonds go up in the secondary markets, a poorer country like Greece or Italy, they can more easily sell their own debt, because they can create more of these and sell them. If I want to make an analogy, I see there's three houses on the opposite side of the street, and there's somebody in the middle who's in trouble. By the way, this guy is not in trouble, trust me, but let's assume he is. What I could do, I could give him some money. Okay, I want to help you out. Here's some money. I had some money. Where is it? Anyway, I give you some money. But from the central bank point of view, that's illegal. A central bank isn't allowed to give a government or hospital or school or company or whatever money directly. They can't do that.
No.
You can only influence the secondary market. What I could do is the guy on the opposite end of the street, if he's in trouble financially, what I could do is I could buy the houses from to the left and to the right from him. As a result of that, artificial demand, housing prices will go up, and the price of his house will also go up. And that's an indirect way of helping some. And that is what central banks have been doing from 2012 on. But they had to do this at a tremendous cost, because they artificially create a market for these government bonds, for debt paper from these poorer nations, because in doing so, they create a belief in the minds of investors and people that these bonds are actually safe. And in a way they are, because if Greece is about to default, you can actually sell your bond to the central bank. Yeah. And then the central bank will take the hits. And to make it attractive for investors to buy these government bonds, they've lowered interest rates all the time. So every time when they bought us a new batch of old government bonds, they lowered the interest rates, so they could say to people, you know what, why don't you buy some of the government bonds, but then new government bonds from the Greek government, for example, because the interest rates are so low. So if you want to play this game, you have to lower the interest rates all the time. And at a certain point in time, and that's the big problem that we're in now, at a certain point in time, excuse me, your interest rates will go below zero. And that's when it becomes interesting. And that's where we are now. And then this model stops working.
And that's where it becomes a practical issue for more so the common person, right? Because not only has inflation gone up, but your interest has also gone down. So our physical money, so that €50 that you were holding in your hand, has lost some of its buying power in that time as well.
Absolutely, because you can't engage in monetary experiments and then expect that the value of money will stay the same. No. Excuse me, because if you look at the balance sheet, like if you compare the central bank to a company, they always say that the balance sheet from the central bank is exploding, that's increasing. That's right. But if you look at the right-hand side of the balance sheet, where the ownership lies, so in a normal company, that's where your stock and your shares and the loans, the mortgage on your building, for example, where they reside. And on the left-hand side of your balance sheet, you have the assets that you buy to have a company. If you're a physiotherapist, maybe you have a building that you work from. Well, that's actually an asset, and it is financed in a certain way. So on the left-hand side of your balance sheet, you have your assets, and on the right-hand side, you have the way how you financed it, your business. And if it's financed in a sound way and you make some money, then your business will survive. Well, if you look at the right-hand side from the balance sheet of the balance sheet of the central bank, what you'll find there is money in circulation. So the money that I'm holding, I'm actually holding it, this piece of paper, but it's not legally, it's not mine. Yeah. It is legally, and I think it says somewhere on it is owned by the central bank. I have to look it up. It says somewhere, there's some small letters on it. Anyway, this is owned by the central bank. The central bank owns this money. So if they print more money, they are diluting the money that is in my pocket. So that's why I suffer. Obviously, if I have one of these in my hands, and there's a limited number of these in the entire economy, and it's being diluted, then it will lose its value. And any other outcome would be impossible to achieve. Yeah. So that's why people feel the inflation.
Yeah. And so what is the implication of the interest rate coming down to zero?
Excuse me, I have something in my, I hope it's not COVID.
Touch wood.
Well, the implication, the problem is that if you go below zero, there is something which they call a zero lower bound with respect to monetary policy transmission. And that is something I've never heard of it. I'm as a journalist, I read all these annual reports from banks, central banks, banks of financial settlements, ECB, whatever. And at a certain point in time, the chief economists from these institutions, they mentioned that that they were going to experience a practical problem, and that is when you do the trick that I just did with the €50 bill. If you do that too often and you decrease the interest rate, you lower the interest rates, then at a certain point in time you will reach zero. But if the interest rate for ordinary people like you and me, if it is below zero, something very interesting will happen. The idea is that by lowering the interest rates, the central bank actually wants us to either buy more furniture and stuff and cars and holidays and whatever, so increase the effective demand in the economy. So for example, if you own €100,000 and the interest rate is €4,000, you earn €4,000 a year by simply doing nothing. If the central bank decides to lower the interest rate from 4% to 2%, for example, you don't make 4,000 a year, you only make 2,000 a year. So that's less attractive. So that might be an incentive for you to go out and spend. And that spending behavior will increase the economy. Another option is that you decide to use your money to buy Greek government bonds, and then thereby increasing artificial demand. So what's happening is that the central bank wants you to do stuff. Let's put it that way. A lot of people say, well, that's conspiracy theory or whatever. No, it's not. The central bank wants to create incentives for you to engage in certain behavior. They can't force you to do that. They can't force you to buy a new car or a new couch or whatever, but they can make it more attractive for you by disencouraging you to do the opposite, which is saving or not buying Greek government bonds. Well, the thing is that you can play this game right until the interest rate becomes zero. Because, well, people might say, okay, the interest rate is zero. Let's go from 0 to minus 1%, for example. Then you actually start paying fines for having any savings. That's, first of all, from a moral point of view, that's very difficult because the government actually always told you to be smart with your money. You have budget coaches, etc. They say, well, you should make a budget and have some savings for the rainy day or your pension fund or whatever. Okay, so people start doing that. They save some money for when they're old. And as a result of that, they're getting fines from the central bank. From a moral point of view, it is really strange. But there's something else that's happening, and it is that if you see that you have a savings account, let's say €100,000, and the interest rate has gone from 1% to 0%, and now it is below zero, then you actually have to pay money to the central bank, which is, you might call it a tax. But you can very easily prevent being taxed this way. Do you know how?
By taking all your money out of the bank.
Bingo. And as a result of that, these banks, they might lose their liquidity position. And as a result of that, this idea of monetary policy transmission stops working. Because if the central bank tells you to do or give you an incentive to spend your saving accounts, but you don't have a saving account with the bank anymore, so you don't feel
the pressure,
the effects of the levy of the negative interest rate. It doesn't affect you, and that's where, how they call it, that's where the monetary policy transmission ends. And there's only, and it's not happening. This effect, you can measure the effect, by the way, but it's not a lot of money. I mean, if the interest rate goes from minus 0.1 to minus 0.4 or something like that, which is where we are now, 0.5, you won't see droves of people getting all their cash from the bank and buying lockers at home, and that's vaults, cash vaults at home where they put their gold and their money. it's not really happening yet, but it could happen, and it's probably going to be more of a problem if the interest rate will decrease further and further and further, which is where we're heading, because the interest rate has been dropping for years. So why should that stop tomorrow? And the central bank, in its own final annual report, has mentioned that the only way of stopping this is abandoning cash. And from a democratic point of view, that is, let's say, undesirable, because if the central bank is creating an incentive for you to behave in a certain way, which is spend your cash, and you refuse to do that because you don't want to, and you don't want to feel the effects of the negative interest rates, then they will simply take your cash, or they will remove the opportunity for you to not be taxed. And that's quite ugly if you think about it. That's what you would expect in a dictatorship. So you own something, you're not doing with that what I want you to do, well, then I take the opportunity to disobey from you. And that's where we are now. And that is central bank digital currency. And that's the opposite of cash.
Yeah. So then we're getting into the interesting world of this introduction of the centralized digital currency. We're coming into
central bank
currency. We're coming into the crypto market with the decentralized currency. And one of the things that comes out of this is also the fact that the reason we've run into this problem is because we're running on a fiat currency system at the moment. So there's nothing truly backing the value of any money that we have in our hands. It's just because the bank says it's worth this much, it's worth this much.
It's all based on trust.
Yeah, it's all based on trust. So one, what is there that stops that happening with the digital currency if that happens? And two, why is it a bad thing if we do go the central digital currency side?
Two things. Well, first of all, the loss of trust could also happen in a cash-free society. But the problem is that in a cash-free society, which is also a fiat currency, what could happen is that the central bank, they could lower the interest rate even further, let's say to maybe minus 5%. And then you effectively have a wealth tax collected by the central bank on your savings without you being able to do anything about it. And then you have the interesting situation, that's me, somebody's harassing me. Not really. You have the American expression, the Boston Tea Party. They said, well, we don't want to have any taxation without representation. So the inhabitants of the British colonies, they had to pay taxes in the United States, which would become the United States, but they didn't have any seats in parliament. And they said, well, we want to end the situation because if you want our money, we want to have a vote. No taxation without representation. That was the start of the American Revolution, and that's when the nation was actually born. What we're doing in the European Union, but other countries might follow, but it's mainly the European Union because we have these weak institutions, and that's why the central bank has to do so much more as compared to other nations. Because other nations, other large nations like the United States, for example, they have different states, but they have a strong central government in their currency union that can keep stuff together, and that power is missing in the European Union. So the central bank should work twice as fast, and that's why the central bank of the European Central Bank is twice as much as its American counterpart. The thing is that if these institutions needed to make your currency union won't be implemented in a democratic way, like, for example, a Secretary of Finance with democratic control. If you don't want to build it, but you wait for all these years and then finally the central bank will do it, the central bank will then be able to levy taxes. I mean, negative interest rate is tax. It is wealth tax. It is what it is. Yep. But there's no way for you to hold them accountable. So then you have moved away from the idea that taxation and representation go hand in hand. You've sort of created an autocratic institution. They will levy taxes. They will take your money from you. They will use that to stabilize banks, which have very wealthy shareholders. These wealthy shareholders, they love it. And there's nothing for you to influence that state aid, because that's what it is. You're actually helping banks, and that's completely undemocratic. Undemocratic.
But then
That's my biggest objection.
absolutely, I'm with you there. But someone listening to this might say, right, if you and I are going to feel the effects of this negative interest rate on our digital currency, won't then those people who are millionaires, billionaires, etc., won't those richer people who have the power also feel this?
Maybe no, because they don't have
taxation?
cash. I mean, the richer you are, the less relevant cash becomes.
But then
I mean, if you're a billionaire, I mean, if you're the richest man in Europe is Bernard Arnault, for example. I'm not resentful. Jealousy is a very unconstructive emotion, but he owns 200 billion euro, and it is mainly in shares. So he has shares in LMVA. It's a French company, and they own Louis Vuitton, etc. So all these luxury brands. That they are together there in one French Société Anonyme, and he owns about 30% or so of it, and he's the richest man in Europe.
Okay.
I mean, cash. If he doesn't, I think that I have more cash in my pocket than he does.
Yeah.
Literally.
So what you're saying is
he's not going to feel the effect, but he will feel the flip side, because if you look at his wealth, for example. His wealth increased by 100%. And in his case, that is 100 billion euro. So if the central bank goes into overdrive because of the pandemic, they will create more money, more liquidity. So share prices go up, bond prices go up, etc. As a result of that, the stock value of his company doubled in 1 year. So he gained 100 billion euro in 1 year. Never in history has one man earned so much in 1 year. And once again, I'm happy here. I mean, you can't see my cat. I have a beautiful cat over here, and I love my life. But I can also imagine what you can do with 100 billion euro. So the increase in his wealth was 100 billion euro in 1 year. And he will probably feel some negative effect from central bank intervention with respect to his currency, but if you put those two together, he is definitely a winner here.
It's marginal. He won't feel the effects as much. No. So at the end of the day, even if it was implemented, he still wins.
Yes, so it is a redistribution of wealth from poor to rich. Yeah. And it is very weird. Why would you do that?
No. Baffles me as to why this has been.
It baffles me as well.
But so we've come to this position now where it looks like they want to introduce, or we know they want to introduce, a centralized European digital currency.
Yeah.
How is it that they're going to go about it? And we've kind of found ourselves almost walking blindly towards this with the introduction of the vaccine passport situation. So could you maybe take us through how we've come to that point as well?
Well, I think that that abandoning cash will be a gradual process. Mm-hmm. So over time, it will be much harder to use your cash, and you might call that the war on cash. It's very interesting. I just read an article in the Financial Times, but it's a year old now. I'm writing a book, so I'm doing this research. So I just stumbled upon this old article in the Financial Times, and it said, well, considering the risk of cash in spreading viruses, I mean, there's all sorts of viruses and bacteria on banknotes, so that's another reason to get rid of them. well, turns out to be it's not true. I mean, viruses, they can't live on dead material.
No.
Bacteria can, but viruses cannot. It's a completely different biological category. But no, the journalist from the Financial Times, he was sure of it. This is the time to get rid of cash. And do you know that terrorists also pay each other in cash? Oh no, get rid of cash. Yeah, that's a war on cash. But a lot of people have cash. I use cash because I also think it's I'm against negative interest rates, so I'm a proponent of cash. Businesses that use it, I will pay them in cash if they want me to. But that will be a gradual process. So the places where you can pay cash, that number of places will decrease. And slowly. After maybe in 1, 2, or 3 years, it will become irrelevant. And then the central bank might say, well, if you don't use cash anyway. But banks, they also remove all the ATMs, for example. In Amsterdam, what happens every weekend is that's a bunch of criminals. They will blow up an ATM, steal the cash, and then the ATM will not be repaired and replaced. And then they will say, well, if we install a new ATM, they will blow up that one as well, and that's dangerous for the neighborhood. So let's remove all the cash from the street. And then people actually start protesting. They say, well, yeah, we want to get rid of cash, but they don't know the deeper implications of it. Yep. So that will be a gradual process. So the removal of the alternative towards accepting negative interest. But with Bitcoin and cryptocurrency, I think that will you will need to do the same over there, and especially with stablecoin. And I think at a certain point in time, there will be legislation and it will be forbidden, and it will come with a bang. And people will say, well, technically speaking, you can't forbid Bitcoin because that's the whole idea, that it is decentralized. So a central government can decentralize currency. I think that people in our governments right now are thinking of ways of bypassing this. And it isn't so hard, because if you want to access your Bitcoin wallet, your crypto wallet, you have to use your phone. And you need to download apps and use the internet, etc. And that could be cut off very easily by the central bank or by the government, by the central government.
Well, this is something that China's tried to do repeatedly in banning Bitcoin over there. Now, they have recently released, or well, not recently, but they've also started using more so their digital yuan. They haven't had much success in permanently blocking the use of Bitcoin.
That's what a lot of Bitcoiners also tell me. However, I think this is a process. There's something going on over there and over here. I mean, these governments aren't too fond of Bitcoin and the decentralized aspect of it. And basically, what's happening with the process that I just mentioned, with the dollar bill and
buying of pens,
in doing so, in being able to dilute the monetary base, you're redistributing wealth. And before we had central banks, you had a decentralized Europe, with especially in Germany. You should read about it. It's called the Kipper und Wippert site. I will send it to you. Mm-hmm. And you had all these little princedoms and dukes and barons, whatever. You had feudal systems, and Germany was fragmented between them, all these tiny states, and they wage war upon each other. And they've come up with a solution, and they call it seigneurage. And it actually means that if you're the government and you control the money supply and you create more money, that money will be diluted. However, so let's say, for example, that you're a company, you're the government, and there's 100 euro in the entirety of society, and you own 50 of them. Then at a certain point in time, you decide to dilute the monetary base. So you create another 100 euro. But the economic output of the economy, the economic output is the same. So you create massive inflation. Yeah. And that massive inflation will also hurt your own position. However, your wealth increased from 100 to 200, and then you get a currency debasement on that. So you still end up being better.
Yeah.
So you have more money, and the money is worth less, but your increase in wealth is bigger than the decrease in the value of your money. And for the people that feel the negative effects, because on the short run it is always a zero-sum game, the people that feel the effects are your own citizens, because they wake up in a world with an increased money supply. The money that they have in their pockets has decreased in value, but nobody gave them more euros. So the government has more euros. They've become worth less, but the increase in how much euros they have is much higher. So in the end, they gain, and that's called seigniorage. Yeah. And if you want to take away that principle, and the same thing is happening right now. It is a little bit different than it was in the Middle Ages, because now we have digital processes, etc. But the effect is the same. It is redistribution to the benefit of the central powers. And if you meddle with the money supply, like Bitcoin is doing right now, you are basically hurting the opportunities that central governments have with respect to seigniorage, with money creation. And in doing so, you're actually hurting the one with the monopoly of violence in your economy, in your society, and that party will at one point in time become violent and remove you.
Yeah,
and that's where we're heading. I mean, look at China, for example. Excuse me. Do you really think that if Bitcoin, which is, and I mean, I'm being invited by Bitcoiners all the time, as if I actually know what I'm talking about. And no, I don't. But I know something about the old financial system and what's wrong with it. And the Bitcoin people, and I really like them. They're fresh and they have a nice mentality, and they invite me all the time. If these innovative people become a threat to the current system, for example, the Chinese Communist Party and the way they finance their operations, they will hunt you down.
Yeah.
They're not going to say, "Oh wow, that's an innovation. How nice! We love innovation." They only love innovations like bigger tanks, etc., and more effective aircraft carriers if it increases the powers that already the capability of the powers that already exist. Yeah. But they will not encourage a technology that is threatening the existence of that.
No, and in fact,
that power, and the same will apply to the European Union. And Macron has said it repeatedly. He says, "I will not let it happen. I will not let Bitcoin and cryptocurrency become a threat to our position." And he will act on it. Trust me.
I don't doubt that, with the way that things have gone.
And I hate to say it, especially stablecoin, I think that's a fantastic idea. That would solve all your problems if you just have stablecoin. Put it that way. So you earn some money. You say, "Okay, I don't want to have any risk. I just made some money. I'm a construction worker or whatever." You take your money home, you put it on your digital account, and you can spend it later when you think it is wise to spend it. You can save it on something for holiday or for your retirement. And you want to be influenced by inflation, negative interest rates. You don't understand it. You don't want to be part of it. Just, I put 100 in, I take out 100 tomorrow, just like that. With stablecoin, you can easily realize that and make it possible. But then again, you would remove the powers that the central bank has to influence your behavior. So they're not going to allow stablecoin as well. That's going to be crushed. That's literally what's going to happen in the next couple of years.
Yeah, what you've mentioned there of the powers of the central bank to influence your behaviors. Are you familiar with the Belfast smart city situation with the digital currency that they've produced?
Oh, that sounds. I don't think I want to hear it. But tell me.
So in essence, what they've done in an area of Belfast is they've set up a whole bunch of cameras where they can track people, and they've created a digital currency. I forget the name of it. I think I've got it here. Give me 1 second and I can pull that up. So civic dollars. So
Oh,
what they've got in Belfast is something called
yeah.
civic dollars. And what they're doing with that is they're essentially incentivizing people to go out and earn these dollars. So by things such as going to the park, and they've got loads of cameras where they can track, hey, who's there, who's where, and what, collecting a whole bunch of data about people's activities so that they can then reward them for positive behaviors that they encourage. And you can currently spend that, give that currency away to charity, or there are some stores, some shops locally that have signed up to be able to use those coins. So you then have actual monetary usage of these civic dollars. Now, for me, that seems to be the way of a soft introduction for the use of digital currencies and incentivizing people to use them for their own personal gain,
Yeah.
which, from my perspective, is also a way that they can manipulate it. But when you hear that,
please go ahead. Yeah.
yeah, when you hear something like that, does that then not follow in what you've just said about how they can incentivize behavior and control behavior?
That's exactly what it is. This is the next step.
Yeah.
Because if you have a digital currency anyway, and you want to incentivize certain behaviors with respect to one aspect of life, let's say health, why don't you go on? I mean, if you can have a coronavirus lockdown, why don't you have a climate lockdown, and then an alcohol lockdown, a liver lockdown? I mean, it's you want to remove the possibilities that people have to make stupid decisions. I mean, don't make stupid decisions. Let's say that up front, but the idea that you can do that for yourself, that is being removed from you, and that's I think that is very scary. And Corona is the excuse to implement a lot of tests and things that people would have found unacceptable several years ago. And I think that is very scary. So it's been much faster. So a lot of a lot of these ideas have been around for years, and now they suddenly pop up and they're being presented as an innovation. You say, well, Arno, don't you think that in the future, people in 100 years, do you think that people will still pay with paper money? I mean, digital cash is an innovation, right? I mean, well, yeah, but the thing is that it is being issued by a central bank that is clearly trying to protect governments and old existing banks that have a solvability issue. I mean, if you just look at the technical aspect of it, I would be inclined to say, okay, I trust central bank digital currency, I trust it. If it is just that, but behind it, there's the mechanism of redistribution. And you can simply read the annual report of the European Central Bank, and they say the reason why we have to implement central bank digital currency, the cashless society, and all the other things that you described that will simply follow, because digital cash is programmable. So what are you going to program? Well, use your imagination. It's not going to stop anywhere. There's no end in sight. The reason why it is being implemented is not because of this desire to innovate. No, it is the idea to start with digital cash is because you are entering a world with negative interest rates, and you are entering a world with negative interest rates because there's so much debt in the old system that you need to get rid of. And you can only get rid of it by using massive central bank intervention. And massive central bank intervention means negative interest rates. That's where it comes from. It isn't cool or hip or whatever. Oh, look at me, I don't have any cash. I am the future. No, you're actually paying off for the legacy assets of those stupid bankers and the greedy bankers and the stupid mistakes that they've made in the past. That's what you're doing. And people don't see the connection. They don't understand, and I really can't understand why they don't see it. I think a lot of people, they just don't want to see it. They say, oh, I have a digital wallet. I'm so hip. Look at me. I'm very cool. Futuristic, isn't it? No, you're paving the way for negative interest rates, and negative interest rates are in effect taxation without representation. So you're going back into the past. You're attacking your own democracy. That's what you're doing here.
I follow what you're saying, and in essence, this element of your funding the banks through your digital cash is the reason we're there is they've made these junk investments of buying either the Greek bonds or they've bought up assets that realistically had no wealth and were just leaking money anyway. And they've had to do that in order to pass the money on to the governments. The governments have then squandered the money in whatever way that they've done. And now we're hitting this point that what you're describing, or I feel where you're going towards, is that they're trying to implement a reset in the monetary situation so that they can wipe out their own debts that they've created.
Exactly.
As if they try to wipe that debt out through the creation of more currency, although the maths initially might add up to, hey, if we're 100 mil in debt, we print another 100 mil, then we're out, right? No, that's not the way currency works. They would just keep digging a deeper hole. So instead, they have to find this new way to overcome this debt situation that they have. Hence why we are where we are with the potential creation of these digital currencies, right?
That's it. That's exactly what's happening. And if you want to have a good reset, a
reset that benefits the people,
that benefits the people, exactly, and the economy as a whole, then you must get rid of your of the old debts, of the legacy assets, as banks call it. But if you want to do that, you also have to wipe out a lot of assets. I mean, like I said, a balance sheet, it's there's assets and there's liabilities. If you want to get rid of these liabilities, some assets will have to be written down as well. I mean, if you look at Dutch cities, for example, they have a lot of mortgage debt. If you want to decrease that, so if you live in a house with a mortgage, and you say, well, house prices are ridiculously high, let's halve them, for example, then your mortgage would also be halved. But your mortgage, the debt that you have if you own a home with a mortgage, is an asset for the bank. I mean, if you owe the bank money, it is a debt for you, but it is a possession, an asset for the bank. If you reduce all these mortgages, then these banks will lose money. And as a result, their stock owners will also lose money, et cetera, et cetera, et cetera. But that would be a real reset. If you would deflate the economy, if you would release air out of the bubble, then the economy would be sound again. And if you would do that, then I would believe that digitalization might be a good thing. Because then it would be digitalization for the sake of becoming more efficient and maybe more environmentally friendly, etc. But right now, the digitalization as we see it right now, and you can simply find it in the central bank annual report, digitalization as it is right now is a means of redistribution, of getting rid of the old debts, without hurting the ones who hold the debt at this very moment. And I'm very much a proponent of the idea that if you're a banker and you made a certain risky decision, you must bear the consequences. And I understand why banks will go out and lobby with governments and the central bank and say, hey, why don't you buy my legacy assets? I understand why you would do that as a banker, but a society shouldn't let that happen. They should revolt, literally. I mean, how can you be so blind and how can you be so stupid for people to simply accept this and see it as an improvement?
Here we've sort of come pretty much full circle to the initial question of the 2008 financial crisis in essence, where governments were bailing out the banks who'd made these stupid purchases, who'd created these stupid mortgages, right? And was it Norway that went a different way about resolving the crisis?
And Sweden as well.
Sweden, and
they've done it previously. They've done it in a previous credit crisis. That there's a lot of resemblances to the one we are in right now and the one we had in 2008. They had a housing crisis, the Scandinavian housing crisis in the early 90s. What happened was, and it's very similar, like I said, to what we have right now. The Japanese central bank was heading for a recession, started printing money. And at the same time, the mortgage markets, housing markets in Scandinavia was being liberalized. So it became easy to attract foreign investment. So what happened is that banks in, let's say, Sweden, they could get financing, very cheap financing in Japan, and fuel a housing bubble in Sweden, because the Japanese economy is massive. So if once they start printing money and it goes to the left and the right through little cracks in the wall, and the smaller country starts to absorb that cash, then you will get a housing bubble very easily. It's very easy to understand why it happens. And what they did, when that happened, is that they let the banking sector basically collapse. So they nationalized all the banks. They did a quick reset, which was very painful, just a haircut. They said, hold on, everybody, we have a big problem with our money supply. So there's something wrong with our financial system. We will sanitize the banks. We will remove the crappy assets. The bankers that have caused the most harm will go to jail. Everybody that owns stock in this bank will lose the value of their money. I mean, it's your bank, right? So it's your fault. And then they send these banks back to the market, and they privatize them again. And the funny thing is that once you, if you think about it, the previous credit crisis in Europe, it was a double-edged sword. It was a combination of an American subprime mortgage crime crisis and a European sovereign debt crisis. It came at the same time. So several banks, they had to deal with local customers that couldn't pay off that mortgage debt, while they also were afraid that they had to write down on their sovereign holdings in Southern Europe. And if you look at the Scandinavian banks, they had to do all these reports. There were crisis meetings with the central bank and the government and whatever. I mean, do you know the book Too Big to Fail?
I've not read it yet. It's on my it's on my
absolutely. You should absolutely buy it. It describes what happens when these bankers in the United States, when they actually realize that they have a problem. What happens is that you have the secretary, the treasurer, Hank Paulson. He understands that Lehman Brothers is going to collapse.
Yep.
So he has the CEO from Lehman Brothers at his table, and he said, "You know what? I'm going to have you asked the other bankers for help?" And he said, "Well, yeah, but there's old grudges and whatever." And they said, "No, they're not going to help me." Okay, watch me. So Hank Paulson, he called all the other CEOs from these banks, and he says, "I want to have you here in 5 minutes." And say, "Well, I can't be there in 5 minutes. I mean, I will have to take my limousine right through Central Park. I can't do that, right?" "Yes, you can." 5 minutes.
Yeah.
And then he had him in 5 minutes, and nobody turned out to be willing to help. Dick Fuld, his name was, the CEO from Lehman Brothers. Yep. He said, "Well, nobody is going to help you." And then they realized that Lehman Brothers would fall, and then they started talking among each other. "By the way, do you own stock from Lehman Brothers, and do you have some of their debts?" And then they understood that they were all interconnected, and if Lehman Brothers would fall, that they would all suffer. And that's the official start of the credit crisis. And interestingly enough, other central banks and governments have followed this example. So it's literally the treasurer and all the CEOs around the table, and they collectively discover that they have a problem. And they did the same in Sweden. So the Swedish central bank and the treasurer, they also called all these bank CEOs. They said, we have a credit crisis. We need you here. We need you right now. How much mortgage-backed securities do you have? Well, zero. We don't do that. Because why wouldn't they do that? They knew that if you engage in these very dangerous activities and the deal turns sour, that the government is simply going to let you rot. Yeah. And that's excellent. And then you had the same situation a few years later with the European sovereign debt crisis, which would have erupted anyway. A lot of pro-European integration people, they blamed the American bankers. They said, well, right until Lehman Brothers fell, there was nothing wrong. Well, that isn't true. If you look at the government statistics from, for example, Italy and Greece, their debt position, it was already exploding. And everybody was wondering, okay, how what is going to be the trigger for the collapse? But it is unsustainable anyway. So, okay. But then they had a similar meeting, and they said, okay, do you happen to have in Sweden the banks? Do you own any Southern European sovereign debt paper, which is very risky? And then once again, these local banks said, no, we don't. We don't own that because we know it is dangerous. And if it explodes, it will explode in our faces.
Yeah.
And that's the whole problem with the Eurozone. The Eurozone, they accepted a number of nations that were basically bankrupt before they entered the Eurozone. And as a result, they weren't allowed to enter the Eurozone in the first place. And these rules were broken. So from day one that the euro existed, it was very clear that it is a
60% or something.
It is, sorry?
60% or something, wasn't it? Their
Yes.
debt level. Yeah.
A lot of countries, they either broke the rules on entering or started breaking the rules right after. And when the banks saw that, they said, hey, wait a minute. This isn't a currency union based on rules and morality, etc. This is what you can organize. It is a hustler union. That's what the Eurozone is. You should be able to make some hustles around. Then you can break laws, you will get away with it, and you get some government funding, the ECB will help you out or whatever. You can hustle your shit together. You don't really have to behave. And once you start a currency union like that, it will turn into one giant mess. And right, we should have done it like what Sweden and Norway did, and to a lesser extent Denmark and Finland. And you should let your banking sector collapse with a terrifyingly loud bang, and it will cause a recession in the short run, and it will hurt. Let's be honest here, it will hurt. But right in the second year of your recession, everybody knows that all the fungus has been removed from your financial system, and that will create trust, and that will make sure that people become willing to invest again. There's no reason for you to hold back your desire to invest in a startup or in whatever, because you know that the system has been purified.
Yeah.
And the Scandinavian countries, economically, they may be the best performers in the world, and they don't have the euro. It's very interesting. If you looked, the most successful nations in Europe, they don't have the euro. So you don't need the euro to be successful. And because the euro became a hustler currency, it is actually detrimental to the performance of your economy. I think also the Netherlands should leave it. But that's the way you should do it. If you have a situation where your banks are unstable because they've piled up all this odorous excrement on the balance sheet, well,
it's junk assets.
It's junk. Get rid of the junk. Call the exterminator. You should treat it like you have a pest like cockroaches or whatever. So if you call the exterminator, you clean your house, and you do it the hard way. So you have to stay somewhere else for two or 3 weeks. But when you come back to a clean house and you can start over. And that's what Europe needs to do.
Is that not possible for us still to do? I mean, is it too late for us to try to implement that kind of methodology?
Absolutely, you can still do it, but a lot of steps are being taken in the opposite direction, which is the autocratic direction, in which you harm certain democratic principles, where you also harm the financial position of ordinary people, even like nurses. I mean, nurses, they had the healthcare heroes. They don't get an increase in their wage. However, they do feel the effects of this inflation that we mentioned. So in real terms, their real income is decreasing.
Yeah.
So they say, no, we have to do this for the healthcare heroes. Well, you're actually hurting them. That's why they're running away. And that's why there's a shortage of healthcare workers around the world, but especially in the Netherlands. And it's interesting how those people don't seem to
Acknowledge.
see that connection. It's how can you not see it? But you can still do it, and you need to do it, I think, suddenly. So you need to have a new government that understands the gravity of the situation. But what's happening right now, and what we're sliding into, is the opposite, and that is a digital currency union. And in a digital currency union, you have negative interest rates, and that is a wealth tax, and that tax on your savings. So hardworking people, they have some savings. You tax them without them being able to exert any democratic control on where it's being spent. And the place where it is being spent is resolving the legacy assets from banks that are being owned by very rich people. Yeah. It is theft. It's I can't comprehend why all these young progressive people that are actually in favor of digitalization on a European scale say, oh, it's so cool, it's so hip. Like what you say in Belfast. I will go there and I will check it out. I'll see what it looked like. How can you be in favor of that? How can you not see what's happening here? It is not cool and it is not hip. It is expropriation.
I think there's an element of because it's technology, it's just assumed to be for the betterment of society and for the betterment of the people. And we've already spoken about
how. Yes,
that's
exactly. That's how a lot of people think.
And yeah, you get these incentives. The people think that, you know, by walking to the park, I'm earning money. This is like super easy. Why doesn't everyone just do this? However,
no, it's weird. Why don't you understand that it's weird? Yeah. Somebody's following you. It's creepy.
Yeah, absolutely. And I mean, the more insidious part of it is once they can start incentivizing, they can also start disincentivizing what they've done in China, essentially with the social credit scoring system. Yeah, they're now implementing their digital currency, and they've already got a way in which they can decide good or bad behaviors are rewarded, be that financially or a lack of financial ability to even buy a bus ticket. However, you know, you've been around the sun a couple more times than me. Someone might say that, hey, Arno, are you just averse to change? You know, once upon a time, people were against the automation of industry as well, and how that would cause a loss of jobs and how that would cause an issue. And yet here we are, post automation, and you know, things are still surviving, things are still thriving. What would you say to someone that just says, yeah, you're kind of blowing smoke?
Well, the thing is, you have to, there's a discrepancy between automation and innovation that is being started by people, by entrepreneurs, or by governments and banks that have a double agenda. I mean,
vested interest in an
vested interest, absolutely. There's a difference there. And if you, for example, my parents are from South Africa. They came to the Netherlands. They were not allowed to marry over there. You had a certain system there until the 80s. And my father used to give computer lessons in the early 80s. So we lived in a small village, and he was one of the first people to own a computer and to help in automation. And what actually happened is that businesses around, even factories, this was the very start of automation. They became much more efficient because planning was easier. You used the computational power of the computer to make better decisions, Excel sheets, you name it. Instead of writing letters, you print them. I mean, that's good, because then you have one entrepreneur and he goes around talking to other entrepreneurs, and together they look for smart solutions. That is automation in the entrepreneurial form. But that's completely different from a government wanting to track your every movement. I mean, that's obviously not the same, right?
I'm with you.
It is not. Then I have these people. They come to me as well. They say, okay, you're against digital currency, but you said your father used to be in automation as well. Are you against his work as well? Do you also write all your papers by hand? That's how they mock me.
With an ink quill, with a little
exactly
tub. Yeah.
Okay, this just so happens to be his. That's a coincidence, but no, that's you need to see the starting point. The starting point is it a local entrepreneur or is it a government? And if you want to distinguish between governments, the Chinese Communist Party is the most lethal, ruthless, repressing, killing machine in the history of mankind. The Chinese Communist Party has killed over 70 million people, mainly their own people.
And
if they come up with something that isn't cool and hip, if they want to have cameras to track your every movement, and to couple that to your online identity and incentivize certain behaviors, that is creepy. I've not seldomly I've compared the Chinese Communist Party to Hitler winning the Second World War. And then people say, oh, that's offensive. I say, well, that is offensive towards Hitler, because the Chinese Communist Party was far more lethal. I mean, just accept it for what it is. It is a repressive regime. I have nothing against individual Chinese people, just like I don't hold a grudge against any German people. But China is a dictatorship. It is a country captured by a certain dictatorship, and there are other countries as well. I mean, like Burma or North Korea, and I feel very sorry for these people. And I think we should help refugees escaping those countries, and countries that are standing up against such a regime should be helped. Absolutely. But if a certain regime like that, one of those regimes that's obviously banned from a surveillance state, if they start doing something with digital technology, then you shouldn't look at the digital part. Oh, digital, cool, it's so hip. No, you should look at the instigator, and the instigator is an oppressive regime. And if you embrace that technology, you embrace repressive regimes in general. That's what you're doing.
Yeah, absolutely. And we've talked about this digitalization of the currency, and you've mentioned it, but we've not touched on it too heavily as to where it is that this is written down, that people can also go find it themselves. This isn't just Sunny and Arno talking of a make-believe factual, a make-believe situation. This is something that's written down in black and white for people to find, right? This desire to create this centralized digital currency, and this desire of also the individual nations. I think it's Rishi Sunak, the chap from the UK, who's talked about creating a British digital currency as well. So where can people find that this actually is a thing that's being spoken about in European Parliament? Or
yes, I will. What I can do, I will make you. I've written an article. I will translate it into English, but I will send it to you. You can easily
upload it with this.
Upload it with this video, and then people can use Google Translate. But what I've done, I've used hyperlinks to mainly English articles, like to the central bank, etc.
Exactly.
And at a certain point in time, I just came across. It's very simple, but you can also Google European Central Bank digital currency, and then you will come across European Central Bank digital currency report. That's what it's called, 2018. And there they said, wait a minute, we have a zero lower bound problem because the interest rate is dropping below zero. That's where it started. I mean, the idea of being able to issue digital cash, the technology already exists. You could have done it years ago, but people didn't feel the need. You couldn't explain to people. The moment when they started talking about this, and with them, I mean the European Central Bank, Mr. Panetta, and the director of the Bank of International Settlements, Mr. Karsten, the moment when they started talking about this is when the interest rate went below zero. That's when they discovered, hey, wait a minute, we have a zero lower bound with respect to us being able to incentivize people to do what we want. That is the monetary policy transmission problem. Okay, we want something, we build an incentive. But hey, thanks to cash, there's actually a way for you to escape. Excuse me. How do we address it? How do we prevent people from escaping the incentive that we create? Central bank digital currency. That is where the digitalization came from. It is not as if somebody said some cool, hip kid with a startup office, orange hair, and a table. At the table soccer at his office, etc. And soy latte macchiatos. And some startup kid invented, hey, wait a minute, we can do something digital. No. It was banks. Banks were calling the central banks and said, hey, wait a minute, you're still going to bail us out, right? With printed money. Yes, but if you want to print money, we need to keep the interest rate low. And we are hitting rock bottom because there's a zero lower bound. That's how it happens. There's nothing cool, hip about it, and you can simply go to the website of the central bank, European Central Bank, and the Bank of International Settlements. You Google or you look for central bank digital currency. You sort not by relevance, but by oldest first, and then it's all there. If you don't see it, like I said, I will give you a short list with hyperlinks to those websites if people don't trust me. But if you don't see it, then with all the evidence in your face, if you still don't see it, you don't want to believe it. And if you present this evidence to people, and it's maybe also a nice tip to your viewers. I don't know how many viewers you have, but if they've been able to make it to this point in our video, the thing is that if you present people with this evidence, and it is very, very hard, and they still don't believe you, don't waste any time in convincing them, because they will never believe you. It is right in front of their faces then, but they still don't. It literally says so.
Yeah. This is
we need a cashless society.
Yeah.
Because of the zero lower bound problem.
This is somewhere I was hoping that we'd come to a little bit earlier in the conversation. So I'm going to reissue a question I gave to you earlier. And,
okay.
Hopefully on the back of this, we'll get a little bit more to the direction I was thinking. We sort of took a left turn when I was hoping we'd take a right with it. So they've spoken about wanting to get this digital currency. We've established now where this is written, where people can find it. So there's factual basis for this. And they've also mentioned different ways of how they can force the implementation of the digital currency and force the uptake from the common folk, people such as you and I, how we can get them to not necessarily stop using the cash, but create a mechanism by which we naturally start using this digital format. And there is a sort of step that can be taken between the introduction of vaccine passport situation and the combination of that with banking apps such as the Dutch banking app that they've created with ING Helena, where they link your banking app to your health passport. And Belgium have already done this as well, linking your health passport to your banking app. So this
thanks for telling this to me, because it was my article.
No, I know. I'm not saying that I'm telling you, but for my listeners, if they're not familiar with your work, this was where I was hoping you would pick that question up and go towards. Could you expand on that for us? This is also something that's super interesting. Like you said, that if people don't want to believe it, there's all this evidence that's there for people to see. So I was hoping that you pick up on what I was referring to in the initial question.
What's the basic idea? And once again, if people don't trust me, go to Google and Google eIDAS directive, eIDAS. eIDAS directive, and it means that by June the 2nd, 2022, there will be a Eurozone, European-wide social security number, and everybody will be issued a digital identity wallet. Brits living in the European Union, like some physiotherapist in Zandvoort living in the Netherlands, for example, he can use one as well. That's how they put it. You're also eligible to receiving a digital identity wallet, and all the aspects of your identity will be put into one convenient app. That's basically it. And it's your driving license, your I mean, you're a physiotherapist, so you have diplomas, etc. You can upload them there as well. What do I have? My banking cards. My wallet is in front of me, as you can imagine. Driver license, gym. Oh, look at all. Oh, wait a minute. This is an easy way for commercial for European. Look at all these cards. If I could just make them digital. Yeah.
Yeah.
That's basically it. People can extract this portion, this part of the of our interview. There's a certain amount of some problems with it, because if your banking account becomes completely digital, like we just mentioned, the abolishing cash discussion, etc., that will yield negative interest rates, and that will work against you. So if you say no, I just want to keep using cash because you can't levy interest rates on cash that's in my pocket. That makes it much more solid than digital money. That's one big reason not to go along with this. The other thing is that if all these aspects are no, let's first tell more about the eIDAS directive. What it says is that that an average human, or all human beings like you, like Sunny, with your European digital identity wallet in a few months, you are a person with attributes. There are things that define you. And it is your age, your gender, your marital status, whatever. There's a number of things that define you, but also your social media profiles, your banking number. It's also a unique number that can be coupled to your European
digital identity.
newly built digital social security number, etc. And when the time is needed, when it's needed, you can actually only show some of the attributes that are relevant at a certain point in time. That's how they phrase it. People can go to just Google eIDAS directive and look for Article 6 and Article 11, and it's all there. Very simple, very easy to find. And it means that in the future, if you need to identify yourself, for example, when you're renting a car abroad, you shouldn't be forced to show all your personal data that you don't want to show. You must be in control. You must have a sovereign identity. That's how they call it.
Yeah.
So if you're renting a car and you feel very insecure about your gender, for example, I mean, if I look at my driver license, it says that I'm a male. Well, maybe it hurts me because I don't believe in the binary world. So I want my European digital identity app, that's how they phrase it, to be able to only prove that I'm older than 18 years. Otherwise, obviously, you couldn't have a driver license. So that's all the information that the rental company needs. It's that simple. The rental company, they will have an app that will create a QR code. And that QR code will only ask for my relevant data, which is, have I ever been convicted for drunken driving and am I over 18 years old? Those data will be passed on to the rental company, and then they will issue me with a car. And if I don't pay or I steal it or whatever, they still know who I am. And they can track me down, or have the police track me down, etc. That's the idea of the digital identity wallet. And the European Commission says, well, it's very convenient because you don't need to carry this with you all the time. And it's cheaper and more efficient. It's more environmental friendly because you don't have to carry plastic anymore. And there's the plastic soup in the ocean. The plastic soup in the ocean is not banking cards. It's something else, obviously.
Something else, yeah.
But that's how it's being phrased. And then you go towards a digital identity. That's right. And it's also coupled to your social media accounts. And the Corona pass that we have in the Netherlands. So you can only enter a bar if you have shown your QR code. That's actually completely compliant with the philosophy and the technology and the legal requirements of your European digital identity wallet.
Yep.
Because if you go to a bar and you show your QR code, you are only proving that you have been vaccinated or recently recovered, but the QR code doesn't reveal your gender or your age, for example. So being vaccinated or not is an attribute of your identity, an attribute that you're actually showing at that particular moment in time. And at other moments, like when you're renting a car, other attributes might be relevant. So this QR code, this Corona app pass, it's completely in line with the idea of a future digital identity. And interestingly enough, in the Netherlands, what we see now is that the number of people who urgently need healthcare because of the pandemic, it is dropping drastically, which is good news.
Yeah.
For people that might otherwise have fallen sick, for their families, for the healthcare workers, because they get some relief. That's good news. I mean, less people in the hospital, people becoming more healthy. That's what you want, right? That's a result of this Omicron variant. It's not making you really sick. That's good news. Our government is investing 30 million in improving the pandemic app. That doesn't make any sense, right? I mean, if the pandemic is waning, why would you? I mean, if you really care about healthcare, why don't you give money to nurses? Yeah. I mean, invest in their salaries. If you go to ask people, I'm a journalist. I do that all the time. I call people. I ask them, what is the biggest issue right now in hospitals? And they say, there's so few people, so few nurses, that doctors have to do the nurses' work as well. And nurses simply can't afford to work. I mean, if you're a nurse and you want to move to Amsterdam or the vicinity here, you can't find a decent home with your salary, so you don't move at all, and there's no staff. That's the whole issue, and that's not being addressed, absurdly enough. But what they do invest money is 30 million euro is in improving the Corona app for a pandemic that is waning. And when you see that happening, then you know one thing, then you know that this Corona app has nothing to do with the pandemic. This is a digital passport that was planned anyway. And the idea that bars and restaurants, the industry, as you call it, I believe in the UK, in the Netherlands, we call it horeca, hotels, restaurants, cafes, horeca.
The hospitality industry. Yeah,
hospitality industry, the industry, right. The idea that they should be the guinea pig in this, it was decided in late 2019, right before the pandemic, because they were building all these apps anyway. And I've spoken to a number of government officials that were doing this. So they received a European directive, thou shalt build a identity app. And they were building it with a QR code. And I have all the documentation. There's a little movie about it, how it will work in the future. Hey, you have to present a QR app before you enter a nightclub, et cetera, et cetera. It's all there. It's all before the pandemic. And then there's this identity magazine. And it's not identity in the woke sense of the word, but there's actually a magazine for people that work in the passport industry with the technology, etc. They have their own magazine. Hardly anybody reads it. And in 2019, a director from the Dutch agency that issues passports says, by summer 2020, we will start a massive testing campaign within the hospitality industry to make sure that people get used to identifying themselves with their phones when they enter a bar. So and we will also start this test when people travel. So not for schools, not for healthcare and other places where people congregate. No, specifically the hospitality industry and traveling. That's when people should get used to using their QR code. But there would never have been a decent explanation to Dutch people for that. I mean, like I just said recently in the Dutch podcast, if there's a bar in Amsterdam where I've been coming for years, and the people behind the bar, they know me, and I want to play some pool. I mean, there actually is a place. If you're good at pool,
we should do it.
I invite you. We should do that sometime.
I'm up for it.
From now on, I have to. When I enter the bar, people say, "Hey, that's Arno Wellens. We know his face. Hi." And then from now on, I have to present my phone. And I say, hey, wait a minute, there's actually a QR code, and now you know who I am. They would have said, shut up and sit down. We know who you are, you silly man. We don't need your QR code. I mean, in that setting where I know when people know me for years, what would have been the value, added value of a QR app? Nothing. It doesn't improve anything, and everybody would have broken it anyway. Nobody would have participated in the test. That's not how Dutch people are. You know them.
Yeah.
You live in the Netherlands. You know, when you go to a bar, you go to several others and you talk to people and you move about. That is a free society. You go where you want to go. Okay, I've had my dinner. Oh, maybe I want to go to a club, or I don't, or whatever. You don't identify yourself with a European scheme all the time because of the eIDAS directive. You don't do that. That's not Dutch or European or British or whatever. That's not how it works. So they said, well, whatever, we are going in the summer of 2020, we are going to start with tests, regardlessly. And there was no way how to, like I said, how they could motivate people to participate. And then the pandemic came, and then they had a reason.
Yeah.
And that's why, and what I always say is that's why you have all these conspiracy theories. And a lot of them are indeed absurd and extremist and whatever. But if you're a government and you're doing something that's ridiculous, then you're inviting people to
create ridiculous theories.
To making alternative explanations for themselves. I mean, if you say, well, because of the pandemic, we are building a QR app. The pandemic is waning, so we'll start investing more in the app that we want to abolish anyway.
Yeah,
that doesn't make sense.
Yeah,
to people, and that's, like I say, that's why they become susceptible to alternative views. But the correct view and the correct story is that the European Commission and even the Dutch government, they agree with this, but the majority of the Dutch people don't. Our political elites want to have a digital passport. That's what this is all about.
Yeah, and it's what we've already touched on with the Belfast situation, and
yes,
what you've mentioned there. It's conditioning behavior. It's conditioning acceptance to be able to do
it's
this.
Testing, and
the whole experiment is to.
It's experiment. How do people respond to it? And and that's how this digitalization is encroaching in your life, and we should resist it. Because if these, what they also do is they want to use Bitcoin technology, so blockchain technology, which means that data collected on you that is being stored in this app will never go away. That's the ugliness of the blockchain technology. Blockchain should have never been used for this. The whole idea of blockchain is that it is decentralized. Sounds cool, right? Decentralized. Well, but you need one central access point to gain to have use over your own data.
Yeah.
And that's very dangerous. So in a normal situation, for example, the example that we had with the pence and a $50 bill. I hope I didn't lose it. Oh, here it is. Also have a 20. Let's say we do the same again. So we do a transaction, and then later on somebody might say, well, you didn't pay me my $20, and this guy might say, well, we never agreed upon $20, and that's the whole problem. If one transaction is recorded in two different places, and one of these people might disagree, then you might get fraud or legal conflicts or whatever. But if there's a third and a fourth and a fifth place where this transaction is recorded, and you only change or manipulate data at one certain point in time, it becomes very obviously that certain point has been manipulated, and where the fault or the fraud or whatever lies. That's the idea of blockchain. I mean, it is a chain of blocks. So data on transactions will be repeated over time, and that's why you get a ledger of all the previous
usages,
all the previous transactions with regard to a currency like blockchain or my asset or whatever. But if you use this technology or this approach on your personal data, then everything you do will be stored at different places. And if you want to get rid of this digital society that keeps track of every single movement of yours, and it will be very hard to do so. You'll literally have to burn down all these data centers with all the cute kitty pictures in them as well, which you find on Facebook. But that's what's going on in these data centers. So there's, excuse me, you'll get a digital version of yourself using blockchain. So when you travel, for example, or you use your app to identify yourself, or you do a financial transaction or whatever, it will be stored in the cloud forever. These data can be used, mined, whatever, for use for ways that you disapprove of. But how can you tell what's happening with your data when you don't know where your data is anyway? And there's no physical need for it. It was never as if ordinary Dutch people, for example, said, "Hey, my life is pretty okay. I have a wife and a child, and I love my cat. Just painted my stairs. My life is okay-ish, but what I need is a digital identity wallet." Nobody ever asked for it. It was an idea created by bureaucrats, and they forced it upon people. And other governments followed suit. And those are also the governments that are very repressive with respect to corona measurements, like Canada, Australia, New Zealand, to a lesser extent the UK. That's what this is all about. We're creating a digital identity. People say it's convenient because your data is stored in one place. Yeah, but if I don't want my data to be stored in one place, because it also becomes vulnerable, or at least you have one access point to all your data, which is your app. And then your data will be assembled throughout the cloud. That's how the system actually works. If you don't want that, because having all your data through one access point is extremely risky with respect to hacking and other forms of crime, we are incentivizing crime in a colossal, in a historical way. I mean, it's like in the movie The Matrix. We will see new forms of crime that have never been existed before, and that governments will have no control over of how to combat it. I mean, that's what people always say. They say, okay, we must be very much afraid of Russian tanks, so we must become one Europe and everything must be bigger. So we don't want individual countries to have one passport or one currency or whatever. No, we need to pile it all together, because only then can we stand up against Mr. Putin's tanks. The thing is, if you make a system bigger, it looks more robust and stronger, but it isn't. Bigger systems become more unstable because there are more
moving parts.
There are more relations, internal relations that might conflict.
Yeah.
I mean, 3 people can have an argument over 2 or 3 issues, but if you put 1,000 people together, there are many hundreds of conflicts that might arise.
A little bit more
of whatever the issue, you can name it, you can invent it, and that's why bigger systems become more complex and hence more vulnerable to hacking.
Yeah.
I mean, previously, if you would have been able to hack Bulgaria's healthcare system, you would have had access to how many people does Bulgaria have? 8 or 9 million to their medical health data. But if all Europeans use the same template, the one who has hacked the Bulgarian the medical health record system, so the electronic health record system, you have hacked them all. So you can use that to extort
everybody,
500 million people. That's what you're doing. You're making the European Union and the people, you're making them weaker. You're effectively hurting the interests of your own people in order to unite them. That is really one weird ideology. Yeah.
It becomes
sorry for
too
that.
much. No. It just becomes too inherently unstable when you export this across multiple nations. Yeah, yeah.
It
totally
is
agree.
horrible. And if people in Canada or Australia are looking at this, but also Denmark, which doesn't have the euro, and Norway, which is outside of the Eurozone and the European Union, if non-English speakers, non-English speaking or English speaking nations are seeing this, but non-European Union nations, this is evil. This is pure evil. I mean, let's put it this way. The doorbell rings. There's a police officer, a male police officers, and the male police officer says, well, you know what? I need to lie in bed with your wife. But trust me, I won't do anything because I've never abused my powers with that regard. I've never cheated, whatever. Would you let it happen? Would you let him sleep next to you?
It's going to be a no from me.
Has it ever? When was the last time that your wife cheated with a policeman?
Can't say it's ever happened.
I'm just assuming that is. I don't know.
I know of, you know.
Last week, no. Okay, obviously never. The thing that a certain risk that it has never happened doesn't mean that you should play with that risk. Yeah. There has never been an incident because you took precautionary measures against the incident. That doesn't mean that you should not be afraid.
Yeah. The risk
probably it's, if you give somebody the opportunity to abuse your trust, then you must be prepared for that person to starting to more and more abuse that trust. Yeah. Or put it more simply, if you go to a zoo, I was there recently and I wondered with somebody, we said, if the jaguar would escape, I mean, if you go to a zoo, you see a jaguar, it doesn't look that impressive, but I was wondering what would happen if the jaguar escaped and he would attack one of your biggest, biggest MMA fighters that you have in your country. Like Badr Hari, he's probably the best in the Netherlands, or Rico Verhoeven. I mean, Rico Verhoeven and Badr Hari, they look a lot more impressive than the jaguar. What would happen? We were fantasizing about it. I thought that the kickboxer would win, but actually it will. We'll have kickboxer burger for the jaguar. This animal is so strong, you don't believe it. But people might say, such fear-mongering. Nothing has ever happened. No, because there's a wall between you and the jaguar. It is one gangster of an animal. And what people are doing right now is that they say, well, all these dangers are around the corner, possibly, yes. Experts are warning against excessive digitalization, et cetera, but we've never seen it going wrong. So you know what? Let's try it. No policeman ever cheated. My wife never cheated on me with no policeman. The jaguar has never bitten anybody in Amsterdam. It never happens. Let's take some risk over here. You can immediately see where it will go wrong. And when it will start to go wrong, and all these data leaks will occur, it will happen in a few years. We can keep store this conversation of ours, and we can
look back on it,
reflect on it in a few years, and then people will say, "Oh, wait a minute, we shouldn't have taken that risk. We shouldn't have let the jaguar out."
Yes, yeah.
And I'm saying, look at the teeth and the claws of that mofo. I mean, you don't let him out. How can you? And it's the same with this. Okay, we put all your personal, vital, extremely sensitive data in one tiny app, knowing that there's a tremendous amount of cybercrime. So all these criminals, they can go to one certain point. They can focus their energy on one point. That's what criminals do. Because they're smart. They're smarter than our governments.
Oh yeah.
And if you want to prevent the abuse, then you shouldn't create a certain situation. You should keep the policeman out of your bed, your wife's bed. That's what I'm trying to say.
Good allegory. I suppose it brings us to the final. Two questions. I know I've kind of gone over the time limit that we set. Apologies for that, but thank you for being generous with your time.
I'll start. Yeah.
So thanks. There's a jaguar down the road. I'm sure you can have jaguar better.
Exactly. He won't be starving. Yeah.
So what do you think is something that we should be aware of that currently people just aren't looking at this point in time? We've spoken about a few different topics here today. Where do you think that people need to be paying more attention?
Everything we've mentioned in this conversation. But if you live in the European Union, just Google the eIDAS directive. eIDAS directive. Look at what it is. SSI. All these terms.
Yep.
I'll send people links and just look at it for 5 minutes.
Yep.
And ask yourself, what's going on here? Why are you building this technology? Should this technology exist in the first place? I'm going to make a horrible comparison. I was wondering if I should do that or not, but I will. Do you know which occupied nation in the Second World War had the highest rate, the highest, as the Nazis would call it, extermination rate of Jewish people? There's one nation that exceeds them by far, the rest by far.
I couldn't tell you.
It's the Netherlands. About 90% of the Jewish population were rounded up and murdered. Yeah. And there's a lot of debate about it, even in in states that were actively cooperating with the Germans, like Hungary and Slovakia and Italy. Bulgaria, they had lower numbers. And there's been a lot of research about this. Simon Wiesenthal, the famous Nazi hunter, he didn't want to blame the Dutch people. He said, well, your country is flat and it has so much water. So a lot of Dutch people don't have cellars where you can actually hide Jewish people. He was quite mild about it. I don't know if that's if he was being too mild. What we know is that the municipality of Amsterdam, they've ordered a machine from IBM just before the war. And it was actually the first computer. It was a system where data from inhabitants were digitalized.
Yeah.
It was the first electronics means of doing so in history. And it worked with cards, Pons cards. So if you needed to query, you needed to enter your query with a card, a plastic card, and some paper would come out, and the computer would make these computations. And what the Nazis invented, so at a certain point in time, the Nazis, they took control of this machine, and they started looking for all the people named Cohen or Polak. And then they simply knew where they lived, and they took them one by one.
Yeah.
It's horrendous. And the lesson from that is that certain technology, if it falls in the wrong hands, which it might, it has such destructive consequences, irreparable consequences. And people might say, well, we embarked on this journey with the right intentions, but like they say, the road to hell is paved with right intentions. And if you, all the technology that's being implemented right now with a virus as an excuse, so the whole story doesn't make any sense either. So all the mitigating measures that could be taken don't make any sense as well. I mean, if you build a completely digital society because of a pandemic, and you let doctors monitor it, that's not going to do the job. You need IT experts to monitor the system and to make sure that it doesn't get abused. But if the healthcare, if the pandemic excuse isn't really a reason for building such monstrous technologies that could result in such devastating outcomes, then people should be aware that this pandemic is used for executing a political ideology that has nothing to do with that pandemic.
Okay.
But the thing is that a lot of people that I talk to, also people in my close vicinity, friends, I don't want to alienate them, but you know who you are. Even now, they still don't want to see it. So when the pandemic is waning, so the government says, okay, maybe we should release the bars or whatever. But we are going to invest more money in the Corona app. If by now you don't understand
That
this pandemic is being used for an alternative, for another political agenda. When will you see it? I think that a lot of people won't be able to see it, and we have this in Europe. We have this. It's called a recovery and resilience facility. So maybe you remember that we just had the pandemic, and then people said, well, you know what, we need to mobilize 800 billion euro in Europe to fight the virus. 800 billion euro. And 20% of that should be invested in digitalization. And all these healthcare workers that I talked to, the doctors, the hospital directors, scientists, virologists, they all asked me, they said, okay, but Arno, that's good, right? The European Commission is going to raise 800 billion euro, and that's going to improve healthcare because there's a healthcare crisis. So if you raise money, it goes to healthcare, right? I said, it doesn't work like that.
Yeah.
You will get less than 5%. 20% of this money, 160 billion euro, will go to digitalization.
Yeah. I think it was from yourself, actually, that I heard. Was it Italy plunged?
Italy, it's the Italian fund, but Italy said we have to pledge 20% to digitalization because otherwise we wouldn't get any cash.
Yeah.
So all the other nations need to do this as well.
Yeah.
But the Netherlands, for example, we have the best internet in the world. Everything here is digital. Broadband, you name it.
Yeah.
So if you want to invest 20% of any fund we don't need more internet. We don't need more QR codes. We need more nurses. God damn it. That's why people are dying in hospitals. Yeah. Not because we don't have internet. We don't have nurses, and the nurses stay away because they don't earn enough because we have inflation. That's the problem. Everything is being handled because of the pandemic, except for the situation that these nurses find themselves in. And then these nurses say, you know what? You call me a hero, you talk about us all the time, but you're underpaying me, bye-bye. I will go and do something else. Yeah. That's what's happening right now.
I've got some interesting...
But people should be aware of this. And the thing is that every step that's going to be made henceforth is excessively dangerous and harmful. Yeah. The next step indeed is building an app with connects your healthcare data to your banking data. That's what it's no longer a study or so. It's not okay, we're going to do a test. Arno, how can you be against testing a certain technology or whatever? Or no, it's being implemented. So if you want to do something about this, and if you don't want to end up in a digital dystopic
society
nightmare, undemocratic nightmare, this is the time to act.
No, wholeheartedly agree. And I've got some
interesting I thought you would, otherwise you wouldn't have interviewed me, but
100%. You're right there. I mean, I've got some interesting anecdotes with regards to the healthcare situation. I know, I'm sure we can talk about it over a game of pool, but what you say there about people who don't accept what's happening in front of their eyes, that with the pandemic being used as a smoke screen, in essence, to usher in this digital revolution, as Mr. Schwab would say, the fourth industrial revolution. It's interesting to see, and hopefully at some point one day everyone will be able to recognize it. But look, Arno, I'm going to let you go because I'm sure you're getting
the longer you wait, the greater the damage will be.
No, absolutely.
That's the whole issue.
It's going to be harder to walk it back when it's further and further implemented.
Exactly.
Thank you very much for
all
the time that you've been generous enough to give us. And I'm going to let you crack on.